Hello everybody and welcome to the market update. This is your instructor Scott C. and today is Sunday, May 19th, 2024. First of all, let's start by talking about what happened last week, and the SPX hit a new all-time high last week. Now Friday was kind of a sleepy day in the market. The market didn't move a whole lot, and I think one of the things you're going to be looking for here is as the market is near some all-time highs, we're in a squeeze position. Now, what I mean by that is that if we can break higher, there could be some FOMO that kicks in, and that can trigger a market melt up from here, causing us to go much higher. I do want to point out this graph of the S&P 500 election year seasonal pattern. As we're nearing the end of May, in a year that we have a sitting president that's running, the market tends to have a great year overall. One of the things I liked about the market in general was that we had a little bit of a minor retracement on Thursday, yet the market was able to hold firm, and really that's an encouraging sign for bullish investors. So we're at an interesting point right here. But again, look for the potential of a melt up from here. So last week, we got the much anticipated April CPI, which is Consumer Price Index report. And the market liked what it saw because inflation looks like it's kind of going on a little bit more of a moderate upward trend. And this is after a string of hotter than expected reports in the last couple of months, causing the market to get really kind of nervous and have a lot of anxiety. So the underlying trends in the CPI release were encouraging. So basically, as we look at this inflation chart that I'm showing you right here, inflation is well off of its peak. It's kind of coming down from the peak, but it's still too high. So that CPI report went a long way in soothing fears that inflation pressures were starting to gain ground again. And I think a lot of market participants think that a rate cut from the Fed still might be on the table, although that's probably not going to happen until much later in the year. Another thing that we're seeing right now on the S&P 500 is that earnings per share overall are rising, and that could support further market gains. Another thing you may have noticed last week is that some of these meme stocks like GameStop and AMC found their way back into news headlines as the stock prices jumped huge. Now, what exactly does this mean? I'm not sure, but I think you can see it as a potential sign that we're returning to the level of speculation or investor sentiment that we saw during the 2021 period when GameStop and AMC jumped really big. And you see higher risk taking during strong market runs. So that could be an interesting thing to keep an eye on. Okay, so for the most part, we've talked a little bit about what happened last week, but what's next? What can we expect going forward? So if you go to the Forex Factory, you can see that really there's not a whole lot happening. Tomorrow, Monday, May 20th, you've got an FOMC member, Waller, is speaking. We don't think that's likely to cause any major moves unless he says something completely unpredictable. Tuesday, you also have some more FOMC members speaking. Again, not expected to move the market at all, or I should say much. Now, Wednesday, we've got the existing home sales, and that could be something that we'll want to keep an eye on. And then you can see that there's the FOMC meeting minutes, which is in red, but I don't think that's likely to really make a huge impact on Wednesday. Thursday, you've got some unemployment claims, which is inflation data. And the market's definitely keeping an eye on anything inflation related. And then you have the Flash Manufacturing PMI. If you go over here to the right and click on the folder, we're going to go down and see why traders care. It's a leading indicator of economic health. Businesses react quickly to market conditions, and their purchasing managers hold perhaps the most current and relevant insight into the company's view of the economy. So basically, they're paid big bucks to know what's going on with the economy and how to make the purchasing decisions for their business. So what they're doing, you can bet the Fed is going to take notice. And then on Friday, you've got this consumer sentiment, but I don't put really any stock in that. Even though they say it's a high impact expected, don't even worry about that. Okay, one thing that you're going to want to pay attention to right now is that gold and oil performances have diverged recently. Oil's recent peak above $120 per barrel was partly because of the reopening of the global economy and the war between Ukraine and Russia. So you've got all these tensions right now in the Middle East, and that is causing uncertainties for global oil production. But oil prices really failed to respond with any kind of a dramatic move higher. Meanwhile, gold prices have moved a lot higher. A lot of this run started earlier in the year as a response to hotter inflation readings. But there's a good chance that there's some growing demand for gold coming from global central banks, and also as maybe some defensive posturing since stocks, equities have rallied to new highs. One of the things that I always like to do to get some short-term ideas of where the market's heading is use the QQQ as a leading indicator. And on the QQQ, I'm using a 10-day, 30-minute chart. I'm also paying attention to a 10-period and a 50-period simple moving average crossover system. Now, paying attention to this system, we would have got a buy signal into the market back on May 3rd. And we've kind of got a short-term bullish outlook on the market based on this indicator. And as long as that 10, which is this yellow here, stays above the 50 is this blue one right down here, we are still bullish. And you can see that it's still above the 50. Now, it looks like it's getting really kind of close to the 50. We could get a little bit of a noise, maybe some crossover tomorrow or Tuesday, depending on what the market does. And if that happens, okay, well, we can play it safe and maybe take a little bit more of a defensive stance. But overall, things are looking pretty good. I'm personally still keeping an eye on MSOX. It's a double leveraged ETF for the cannabis industry. The option premiums are very high on this, and this industry right now is very news driven. So if there's any inkling that any kind of favorable news will come down the pipeline for this industry, you could see it move up in a hurry. If you follow me, you know that I pay close attention to Bitcoin and what it's doing, and I like to use BITO to trade Bitcoin on the stock market because you can do options with this one. Now, if we step back and look at a 1-year daily chart, we've had a huge run. We got into this little consolidation. Looks like we had a bit of a exhaustion move right here, and it's been making its way up ever since. Now, it seems to me that this downward trending channel right here has been broken, and that's good news. Typically in the past, after every Bitcoin halving, it's taken Bitcoin a couple of months before it takes off again. So if we look at the one that happened here in 2016, you can see that here's the halving. It's the dotted line right here on the chart. And then Bitcoin didn't really take off until a couple months later. Back in 2020, we had the halving. And for the most part, Bitcoin held its ground, but it really didn't take off big until a little while later. So I think a lot of people have been expecting Bitcoin to have this magic jump with this halving, but if it follows the prior couple of patterns, it might take another month or so before it gets moving again. But history doesn't always repeat itself, but it often rhymes. We talked a little bit about gold earlier, and if you want exposure to gold, I like NUGT. It's a gold miners double leveraged ETF, so you're going to get some bigger moves out of it, but greater rewards also means greater risk. It can move a little bit faster. Now, another stock that I think you should keep your eye on is FCX. This is Freeport-McMoRan, and they have huge exposure to copper. There's a rumor that China has these huge stockpiles of copper that they're dumping on the market. And if that's the case, it could push the prices of copper down and you'll see FCX drop. However, I have seen a lot of speculation that the quality of these copper reserves that China has isn't all that great. And there's still such a huge demand for copper that if the price does get pushed down in the short term, that could be a very strong buying opportunity. So definitely keep an eye on things right here with FCX. This is a great stock to have exposure to copper. It's near some highs right now. I think if we got to pull back near 50, that could be a potential support level. Now, if it breaks 50, I think 45 might be the next place to be looking for a potential buy with FCX. That's all I've got for you this week. Good luck and happy trading.